In today's class, we are going to talk about depreciation. In talking about depreciation, I'm going to do few illustrations to understand the basic aspects of illustration types and categories. First off, what is depreciation? Depreciation in accounting is an accounting method that is used to allocate the costs of tangible assets such as machinery, equipment, buildings, and among others, over its estimated useful life, that is the asset in this instance. So, since assets lose values over time due to wear and tear, daily usage, or obsolescence, or any other factors, so depreciation helps to match the cost of the asset with the revenue it generates during its useful life. Depreciation in this instance is a non-cash expense in accounting. It is an actual outflow of cash, but rather reflects the allocation of the asset's cost over time. That's about the idea or meaning behind depreciation. So since we've already talked about the meaning and idea behind depreciation, so let's talk about the methods of depreciation. Generally, there are two methods of depreciation, straight line method, and we also have the reducing balance method. We're going to take them one by one. The first one is the straight line depreciation method. Important point to take note under straight line depreciation method is that straight line depreciation method, it allocates an equal amount of depreciation expense to the asset over each year of its useful life. Formula for calculating straight line depreciation. The formula for the straight line So the formula is giving us depreciation expense is equal to cost minus salvage value. Cost minus salvage value. Salvage value. This cost and salvage value will be in brackets. Everything divided by the useful life of that particular asset. All this formula I'm writing down is very straightforward, and I'm going to explain it in case of application. So the formula for straight line is cost minus residual value divided by useful life. So the cost in this instance refers to the original cost of the asset, where the salvage value is the estimated value of the asset at the end of its useful life. Now, and the useful life in this instance is the estimated duration the asset is going to provide value for. So this method is quite simple and provide a consistent and predictable depreciation expense each year. Let's now take an example under straight line depreciation method. So example, I'm going to use a very simple example to understand the basic idea behind straight line depreciation method. It's very, very simple. Suppose a machine cost cost 1 million naira and that machine and it has a salvage value of 100,000 naira. and useful life its useful life is given as 5 years. So this is the question now. Before solving this type of question, we first of all we need to write our solution. So before I start solving it, it's quite simple. Let me explain a few things. In the formula I gave earlier, the formula now, the formula talk about the useful life of an asset. It also talk about the costs and the depreciation of scrap value. So now, in that formula, we are going to make use of this formula here, the straight line depreciation formula. The annual depreciation expense in this instance is going to be, that's where we are going to bring in our formula. The annual, that is the yearly, the annual depreciation will be, so the annual depreciation expense will be the cost of that machine, the actual cost. If you can remember in the formula, the formula says cost minus salvage value divided by the useful life. It will now be what? It will be 1 million naira minus the salvage value given as 100,000 divided by the 5 years useful life. So that's just what you just have to do. So now be everything will be in brackets. Don't forget 1 million naira minus 100,000 then divided by 5. So if you try and press this in the calculator, you're going to arrive at 180,000 naira. So I think we are good about the simple application about straight line depreciation expense.